Stream is up. It's popping. Let's talk about it. Go ahead and put this over here on Clubhouse. 1 second. I'm putting the link at the top right now. Okay, link is there. Excellent. Go ahead and share this out to social media. The one thing I'm gonna tell y'all might laugh at me. The one thing I miss more than anything right now, while I am working on all this stuff, I haven't been able to read my economic reports as much as I usually do. Mm-mm-mm-mm. All right. Okay, so we're gonna have to check a few things today. We'll get around to that in a few moments. Good morning, Britt. Good morning, Terrence. At the top of there's a link. You can come and see what we're looking at over here. I'm sharing my screen with you. Let's talk about this. All right, so right now, what you are looking at is a really decent recovery in the tech sector, right? Um, you know, taking the long tech position, you know, this actually was a part of that thesis here. As you can see, the tech sector itself is well ahead of the Nasdaq, right? If you look at the QQQ, is up 0.7. Tech sector up 1.1. Right. So we'll see if this continues. But as of right now, it's definitely lining up and giving us what we're looking for here. All right. Now let's start from the top as we usually do. We're gonna work our way down. We should do a top-down analysis here, and see how things are looking so far. All right, now let's pull up SPY. We'll talk about this here. Let me open this up. 125%, so y'all can see this more clearly. Let's start by talking about what we see here on the charts here right now. All right, I'm on the weekly chart. And, you know, one of the first things I'm going to point out right now is I want everybody to you know, I'm going to pull an Aaron Rodgers right now and say, just stay calm. You know, just chill. It's all good. All right. So if we were to match from this low right here to this high right here, you can see we perfectly tested that 50% range. All right, y'all seeing that? We perfectly tested that 50%. And this is not the first time. Also, right here, we tested that 50% mark and could not break through. So the way we look at this is we keep it very simple. Okay. Keeping it very simple here. Keeping it very simple. All right. Keeping it simple. It's that simple. All right. That's simple. Okay. Bullish over 50, bearish below. All right. Sure, you might say, well, you know, bouncing off that 50 would have been a better entry. Certainly would have been. Certainly would have been. Definitely not going to double down on it. You know, gonna let it play out how it plays out, and we're gonna rock from there. Okay, keeping it real simple. But from this weekly perspective, as you can see, we are holding on. We're holding on. All right. The January barometer still has hope. Still has hope. But I don't know how long that hope's gonna last, y'all. I'm gonna let y'all know that right now. I have no idea.
Keep hope alive.
Yeah. We'll keep it alive for now. Now we are trading. We are trading above the daily pivot today, but we're trading below the micro trend. We got a lot of recovering to do before we can really say we're back in good shape. All right, we gotta push our way from about 682. Let's call it 683 to 687. All right, and you know, the 5-day ATR, 5-day ATR has already been pretty much stretched on the day. So this is going to have to be one of those days where we go above and beyond the ATR. But it kind of makes sense in a nutshell because we are supposed to be in the midst of a volatility expansion anyway. All right. So we'll see. We'll see how this how this plays out. Are we gonna go from a change of character to the downside? Oh, I'm sorry. You know what? Dear God. Y'all couldn't tell me I was looking at tech the whole time. All right, there we go. Either way, same thing. Either way, same thing. Very similar thing, right? Still stayed above the 50%. That's going to be the same thing for all of them. But either way, are we going to go from? Oh, and we tested a high volume node yesterday, like we talked about as well. All right. So for the week, hits the high volume node, bounces from there. This high volume node was yesterday. All right. Now let's come down to the daily. Take a look at that really quickly. Okay. So again, hits your high volume node, starts to bounce from there. Let's see how this plays out. Okay. We are hitting a point where there was a lot of selling from yesterday. All right, so we're gonna be mindful of that. But all in all, and nonetheless, um, we're gonna let things play how they will. Let them play out how they will. Now, back over here, 686.44 lines up with your micro trend. So you get back above your micro trend, you get back above your first point of support here. All right. And as of right now, we're still really, really working on that. You'll also be back above the midpoint of your you'll also be back above the midpoint of your 5-day and your monthly trend. What's interesting here is that they're both working off of the same midpoint right now. Right. So the range that we're currently in right now over the past 5 days, that means it's the exact range of the past of the past 1 month. Do y'all realize that? That's crazy. We've gone nowhere. That's what that's telling us. That's what that's telling us. The past 5 days have set the range 1, 2, 3, 4, 5. The past 5 days have essentially set the same range as the past month. So if we were to count back 20 days, you'd pretty much have the same midpoint. Right? So everything's working around that midpoint right now. Again, that is 686.33. All right. That's on SPY. So very important to get back above this level today. Very important. It doesn't necessarily have to be today, but very important to get back above this level. You can see how important it is. Look, 686.33, 686.33, 686.50, 686.44. Okay. You can see the importance here. Now, I would like to point out that we did hold on to that point of control. Yeah, we closed below it yesterday. We closed below it yesterday. Where did we close at yesterday? Let's see. We closed at 677.58. Right, just right there. But that happened to be just outside of 2 standard deviations. In fact, the snapshot I took earlier would have said to you that you were 2.2 standard deviations. It said that this morning. That's crazy. I mean, it really did say that. It's crazy. I wish I still had that snapshot. Oh, I think. Wait, did I? Yep, there it is. If you go in the chat right now, you see it says this is what it said. SPY is stalling below the point of control. That's what it said. SPY is stalling below the point of control. The current price shows a 2.2 standard deviation from the 20 SMA, indicating extreme statistical extension, which also with high mean reversion potential. What did I tell you, Cecily? Did I tell you who's going to do it? High mean reversion potential, it says. All right. Setup logic, identify a mean reversion gap setup following a pivot low and structural trigger. Right now, this setup is consolidating for a volatility break. The target will be the 20 SMA, closing the standard deviation gap. How crazy is that, guys? This is bananas right now, actually. This is, I don't know what to say. Now, it could do a little better. It could do a little bit better because there's that one part in there where it said identifying a mean reversion. It's supposed to be saying basically, um, like that's what it's identifying, right? Um, so I'm gonna have to do something about that. We don't want to make it too human, do we? Should it say that I'm identifying, yada yada yada? 1 second, guys. All right, sorry about that. And let me put my comments on this other device as well. So yeah, sorry about that. Anisha, I'm just looking at the comments now. So 12, 8, 25, and 11, 17, 25. Okay, gotcha. Okay, you're talking about when I was putting that thing there. So remember, we just try to identify the range. So let's go to QQQ now. Wait, no, let's read through what it says here. So position above 50 SMA. Yes, it is. Yes, it is. Positioned above 50 SMA, 681.52. Current price shows a 1.35 deviation from the 20 SMA, indicating a healthy trend alignment with low exhaustion risk. Okay. Identifying a neutral consolidation following a change of character here. This setup is consolidating for a volatility break. So you wait for a structural confirmation. In other words, they're saying you're looking for a change of character to the upside, pretty much. But
why can't you just have it say that? This the same wording that you be saying that I still all of this. And
so that's what it said. It said wait for a structural confirmation.
Okay.
Yeah, it's no. And I'm saying I'm basically I'm saying it's not going to say wait for a change of character because you could be waiting for a break of structure, for example. All right. So structural confirmation just means wait for market structure. Basically, that's all it means. Does it make sense?
Yeah, it does.
Let's see here. Or you could be waiting for the 5-day trend, so for example. You see, so basically when it says wait for structural confirmation, you decide what structural confirmation you want. That's even better to say it like that, right?
Yeah, that does.
Right. So like you could say, I'm gonna wait until we get above the weekly pivot, or I'm gonna wait until we get above the 5-day trend, or I'm gonna wait until we get back above the 20, or I'm gonna, so like you can decide which structural confirmation you want. For me, I would wait for the change of character back to the upside. That's what I would wait for. All right. Let's talk QQQ. Right. Again, same deal as you can see here. Right. Pullback yesterday did not break the 50% mark. And here we are testing that testing that key level again at 1388. Pretty nice. Pretty nice. All right, now. Again, if you look at it from the weekly, again, we've been in a like just a massive consolidation here from a weekly perspective. So the past 1, 2, 3, 4, 5, 6, 7, 8 weeks. Right. So for 8 weeks, we've pretty much gone nowhere here. Obviously, the question would be: are we dealing with accumulation or distribution? In this particular case, we have seen some signs of distribution. I'm just gonna lay it on the table, right? All those moments of opening higher and closing lower, opening higher and closing lower, right? All those moments where that's been happening over these 2 days here, that was distribution at play. So sure, we end up, taking a dive here. You might say, well, why didn't we just get out here when we saw the distribution? Well, I mean, at the end of the day, we don't want to get ahead of yourself either. Right? At the end of the day, you gotta, you gotta play the cards that you've been dealt, and you just let things play out how they will in the market. You don't try to, you know, like you analyze and you position, right? You analyze and you position. And once you position yourself, right, you leave everything up to the market from there. You don't try to play the intuitive game of, oh, I think I see this coming. I think I'll do this in response. You more so just position yourself as best as you can and go from there. All right, that's it. That's all you can do. All right, now, let's see. The VIX is down 10.8 percentage points, or 2 points altogether. So again, good thing we rolled up out of that bad boy yesterday. So that actually worked out perfectly for us, right? So we closed that out, get a little squeeze out of that, and then coming back around, when you come back around, you say, okay, cool. Well, I can move that money out in time and see what else I can do with it. Right. But the VIX definitely put a little bit of a pad beneath things yesterday and kept things, little cushioned, not a lot, but a little bit. So, you take lessons from that. And you say, okay, cool. Well, what do I need out of the VIX in the future? And then again, the next time you position yourself, you do it according to that. You see what I'm saying? So, all right, now let's see here. Okay. Let's see. I mean, pretty much all the same story as SPY. But this is it's stalling below the weekly S1. Oh, 613.88. Right, there it is. It said, look, so that's crazy. It said that, right? Stalling below the weekly S1, 613.88. This is the same 613.88 we have on our chart right now. It said it was stalling below that point. Current price shows a 1.54 standard deviation, indicating a healthy trend alignment, low exhaustion risk. Right. So, whatever movement we're doing, go from there. You identify neutral consolidation following a change of character, structural trigger, setup is consolidating for a volatility break, yada yada yada. So of course you're gonna get the same things for the indexes because that's they're pretty much the same thing. All right. Let's see what it says about the tech sector. Let's go ahead and slide on over there real quick. Why not? Why not? It may say something similar anyway, because the tech sector pretty much is the NASDAQ. But, I'm curious. It's on the weekly low. Okay. Okay, now they know. Did y'all just see it change? Did y'all just see that? It just changed. It just changed its analysis right in front of our faces just now. It went from saying it stalled below the weekly low to saying it's positioned above the weekly S1. That is crazy. You saw it. So you saw it, Anisha. You saw it?
I did.
That's crazy. Wow.
That's high too. That was cool.
Now, I didn't know how it would end up working. I didn't know how it would end up working. But if it's going to be changing with the price, that's wow. Give me a second to soak that in, guys. Give me a second. I need to sip my tea one time. That just happened. Okay. So it's an inside range structural trigger. So this part, like this part right here, is the part that I'm going to be looking to, looking to work on. The setup logic. Setup is consolidating for volatility break. Wait for structural confirmation. Right. So it's urging patience on the indexes. Now that's unless you're already in there, which well, it technically still works for us as well, right? Be patient. Savannah, please come back this way. Just leave him be. All right. Okay. Now let's get into the other side of the game here. Let's go on over to U.S. oil. Oh, and I just gotta fix this before I send it out, guys. I just gotta fix this right here before I send it out. The what do you call it? The name. I accidentally I accidentally changed the name on so my bad. Once I get that back there, we'll be good to go. I'll send the new version out. And I'm gonna send out along with it, I'm gonna send out a breakdown of all of the just all of the conditions that it looks for. So you can see for yourself what all it's looking at. All right, position above the weekly pivot. All right. Current price just off of the standard deviation, indicating healthy trend alignment. Active bullish trend. See that? Identifying an active bullish trend. All right. Okay. Setup is confirmed by rising. The setup is confirmed by rising momentum and a long bias conditions. If you're long, they're saying hold your position. The trend is intact. That's crazy, guys. That's crazy. If you're long, they're saying hold your position. The trend is intact. So, like I said, I just kind of pieced all of the little. So, like here, I'll show you guys. Let me show you guys. I'll show you guys inside. We'll take you inside the code. So you see down here. So it has all these little things that are pieced together that it can that it can bring out. All right. These are all your structural things here. So these are your different combinations. So my goal is to have like I don't know how many combinations makes it almost what's the word I'm looking for? I don't know what number of combinations makes it seem more normal, I guess you would say. I don't know what the word I'm looking for. But I'm going to try to create more and more combinations over time of things it can say. Check Google. All right, let's check Google real quick. Okay. And just for the record, this is meant to be a way to train your mind is what it's really meant to be. So it's meant to be like a it's meant to help train you as a trader, right? It's what it's meant to do. So, for example, right? You see, so it's at 326.52, right? So it's somewhere in between this area right here, So let's see what it says here. So it says it's stalling below the previous high, 327.73. All right. Current price shows. All right. So it's a healthy trend alignment. Okay. Low exhaustion risk. Active trend following an inside range trigger. Setup is confirmed by rising momentum, long bias. So, basically same thing. Hold your position. The trend is intact. So, okay. I could dig it. But again, that's just down there to help with your thought process. That's all it's down there for. All right. So like if I was looking at Google, right? If I was looking at Google right now, then I'd want to know with this inside range right here, where are we? So we're still above that 20%. So yes, trend is definitely still strong. Could be bouncing from near the 20 SMA right here. Got a rising 20, so that's good. So we got 108% of the daily bias. We said that today we're gonna have to go above and beyond the 5-day ATR, right? That's the only way to get the data we need. Right? We need a big day. Microtrend 328.95. So Google could be giving us a breakout swing today if you have a big enough day. Let's go to the chart. And you just might be getting a big enough day. We'll see. So if Google can close above 328, I think you got a breakout swing there, Anisha. And I think it's going to be a good one too. I think you take out these highs. So all right, can somebody write that down and check me on that tomorrow. All right. So if we close above the micro trend, we get a breakout swing. I believe from there you take out these highs. So let's write that down so we can check on that. Because y'all know I'm gonna forget. I'm certainly gonna forget.
Make sure I understood you correctly. So I break above the microtrend?
Mm-hmm. I close above the micro trend.
I mean, I close. Okay, close.
All right, and a breakout swing. So basically, when we get above the micro trend, we should well, no. So no breakout swing. Just to close above the micro trend. Sorry about that. Because you won't get a breakout swing. I don't think you will.
You said if we close above it, we'll most likely take out the highs.
Right. Yeah. So but I'm saying just the micro trend though.
Mm.
So don't add the breakout swing. I'm saying because I don't think you're going to get a breakout swing because you won't be above the weekly pivot. Sorry about that. Sending a message to the wife. So okay, yeah. So we close above the micro trend. I believe we'll take out the high, which by the way, would trigger the breakout swing. So you'd be getting a break of structure, right, with a breakout swing, which means that who knows where you go from there. If it happens by the end of the week, then what do we have here? She probably headed to maybe the R2. right here. So if y'all want to write that stuff down, then we'll double check it, right? So close above the micro trend. I think we'll go to take out the high from there. Taking out the high would then and should then well you get the breakout swing before you get to the high actually, because the breakout swing should trigger around maybe like 332-ish, pretty much around this area here. So maybe maybe today is so big you get the breakout swing anyway. Yeah, but you would have to get above the micro trend and the weekly pivot to get the breakout swing today. Yippee-ki-yay. Let's see what happens. All right. So yeah, so Google looks definitely on the bullish end. It's actually one of the best bullish setups that I can see right now, which is good for tech. That helps us out, right? In fact, I haven't looked at my portfolio since this morning. Let's take a glance. Okay, not that bad. I mean, we ain't killing it or nothing, but we doing some things. So from what I've noticed, Anisha, is that they pretty much play the spread game on XLK. So pretty much the value is changing more. So like let's say it starts to fall, XLK starts to fall, then the bids drop off, for example. It's kind of what I'm getting at, right? The value starts to rise, the bid, the bid. So basically they're moving more of the bid to change the value than anything. So this is probably gonna be the last time we trade XLK. We're gonna stick with this. We're gonna stick with the T triple Qs. They're not gonna keep playing with us. Because they like to move the spread in order to get the price that they're looking for, instead of actually moving the entire like spread itself, like the bid and the ask, so but either way, did y'all just see that? It just flashed bullish above here somewhere. I don't know where that just came from. It literally just flashed bullish right there. That's what it said. Oh, no. I know where that came from. I know where that came from. That came from earlier when we were looking at yeah, there it is. When we were looking at this, that's what it was. I'm like, what? Let me get rid of this. So everything's all good. Everything's all good. Yeah, we need some more phrases though. We need some more phrases. I like the strategy part of it. The strategy part of it is working just fine. Right. The market dynamics and the setup logic need more work, right? Those two need more work. So I will work on that. Need to create like a hierarchy or something like that, like having it where it kind of knows what we need to do there. Let me do something about this code right here though. 1 second here. Let's see if this works. No. Okay, so let me see. Now, and you can see how the experiment is going right now, Alicia. See that? Notice that thing is not working now. That one thing I told you I was experimenting with. But January 20th, it ended up being a big day, didn't it?
Yep, I see it.
But I'm still getting these errors though. You know what? So when I sent you guys that one with JavaScript, right? When I sent you guys that with JavaScript, did it just leave the stuff blank or did it say it wasn't working? Which one was it? Did it just leave some of the stuff blank? Because I can't remember what you guys said.
Yeah, I think it was. That was yeah, it was blank.
It's just blank. Okay. So that means if I wanted to, I can put this in JavaScript. I'm going to try this one more time. Maybe later I'll. Okay. Maybe I'll just put it in JavaScript. Okay. Let's see here. Let's try to write this in JavaScript real quick. Hmm. What's up, Curtis? What's up, William? What's up, James? So I'm just doing this little code real quick. Let me see if it works. Which one of y'all is on the index? Let's see, 2 people on there.
Not at this point.
Extensions, scripts. Okay, Moji's on there. Okay. All right, Moji, I see you. Drop the scripts. Save it in. Run. Oh, snap. Did that date just change on there? Is that something? Let's refresh this one. Oh, that didn't.
Now that you mentioned my name, I have a question for you.
Yes, ma'am.
So you know how like you always say, you have a stock, it's doing well, you take your profit, you leave your equity.
Mm-hmm.
Like, what if it's like a stock you're owning for long, right? Like, how am I supposed to remember what like my initial equity was like 8 months ago? I mean, yeah, I can do research, but like,
No,
you get what I'm saying?
it's a
Like,
good question.
It's
a good question. So you gotta stop investing random amounts, right? So the way I remember is because everything I do is systematic. Again, I'm going to take you back to the billionaire's mindset, right? You may have a certain amount you're willing to allocate to certain things, right? You say, okay, cool. You know what? I want to, whenever I find a really good stock, I'm going to invest $500. Whenever I find, something more speculative, I'm going to invest $250, for example, right? So that way, when you're looking at that stock and you see it has, let's say it has $350 in it, then you know that had to be one of those speculative plays, and that's $100 in profit. I just know that. You get my $100. We get that.
Right? Gotcha.
You look at it, You look at it, it has $700. Okay, that's got to be one of those big plays, and you put 500 in there. Let me get my $200.
Gotcha.
See how you play the game.
Yeah.
Yeah. Keep your investing consistent. Right. And that means that's going to require you in many ways to say, okay, you know what? I'm going to go in. I'm going to look at my portfolio, and I'm going to, like if you look at the index, when you're looking at the index, right?
Uh-huh.
Let me come over there right now. I'm gonna pull up the index real quick. I'll take a break from what I'm doing real quick. Let's pull up the index.
Okay.
All right. So anybody that wants to take a look at what we're looking at, the link is at the top of the screen. You can come over here and tap on in with us. All right. Don't mind that the screen wasn't moving for a second there. I was in the background trying to write a code. Well, trying is the operative word. All right, now. Boom, 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 boom. Okay, so you see over here, right? Wait, what's going on? Give me a second. Quantums. PS3. That's very interesting. Very, very interesting. Okay, okay. That's crazy. Let me see something. Let me try something real quick. So notice this is loading. Okay, I know exactly what I'm gonna do here. Right. So that's how we're gonna play the game. That's how we're gonna play the game then. I'm actually going to edit my I'm gonna edit my spreadsheet later emoji, but and I'm gonna make it so that way it does the 52-week high and low. Keep it really simple. Because basically what's happening is some odd reason Google is taking a lot longer to load the price here. I noticed that. Remember yesterday I was like, I never seen Google take that long to load a price.
Yeah.
Right. So I don't know what's going on. It could be some delayed data. I'm not gonna lie. It could be the freaking AI. It's just sucking up all the juice. It's very possible. But either way, what I'm gonna do there is I'm gonna just have the 52-week high and low. That should come in pretty quickly because it's coming off of a table, right? And then it'll just mark the alpha from there. So whichever one of them is holding their highs better is going to be the winner. That's pretty much what's going to end up happening. All right. So who continuously sets new highs. Right. It's going to be the winner there in terms of the alpha that they have in the market. But so pretty much right here, these quartiles, for the most part, these quartiles usually, what did I just do? Okay. So these quartiles usually tell you, how much they tell me how much I'm going to invest in either company. You feeling me? That's what ends up happening. So so these quartiles take this alpha, and they say, okay, well, because this one has the most alpha, you invest the most here, and then it kind of matches it down the line from there. All right, so that's basically what I was about to show you, but they're acting up. So yeah, like I have an entire system to tell me how much to invest in each company. Create a system, right? Well, actually, in the portfolio mastery, you're going to learn how to create a system. So if you're patient, you'll get there pretty quickly, actually. So
I thought at one point it was the same amount in each.
right, we that was up until last year. Yeah, remember last year we created a alpha weighting system.
Yes.
So instead of a market cap weighted, we went with an alpha weighted.
So the billionaire mindset is alpha weighted.
Yeah, right. Like so, you come to me. Let's say you and Anisha come to me with a project, right? We both say I'm looking for some investment, right? I'm not going to give you both the same amount of money, right? Somebody has a better idea. Would you agree?
Yes.
You're going to invest. You're going to invest more in the better idea, right? Like we got rid of Oracle. Remember that? When we got rid of Oracle, they're down 2.8% today.
Yeah.
They've just been plummeting since we got rid of them. The billionaire mindset. No matter how good it looks. See you later. I don't care. I don't like you're not the sob stories will not work.
Yeah.
Right?
It's yeah.
How do you think they got to become billionaires?
Thinking when you said that.
Right.
Stay in a company because you believe in a company. It's got to produce. It's got to have the values.
Right.
Valuations and everything. So.
And trust me, this is not to say that billionaires don't have hearts. I'm sure they left a few pillars standing, here and there.
For those that, yeah.
But we're not gonna bleed money for you. It's not gonna happen. So of all days, while we're having this nice tech recovery, here goes Oracle again. Get out of here, man. Saw that coming. All right. Notice I didn't say I saw that coming. I just said saw that coming. All right. As in our system caught it. Caught them red-handed, trying to steal out the cookie jar, trying to take our hard-earned money. Consequences for that, Alicia. Consequences. We won't call the police, but you got to get the hell out of the building, huh? You're turning your key card.
When you get a chance, can you look at Sterling Infrastructure?
Yes, ma'am.
I just love it, Anisha. I love it.
Let me see here.
What's the love?
Sterling.
I mean, you just honor it,
Oh, I thought you were gonna say you love your job.
I really do. I really love my job. Really.
I'm just gonna try this code one more time, Anisha, and then we're gonna take a look at Sterling.
Anisha, I love my fraction of sterling that I picked up a couple of weeks ago.
Oh yeah,
Just a fraction.
stores up nicely.
It's ridiculous. Yeah, just you guys always say like just get the fraction because I just got it as a reminder. Like if it does drop, it's not dropping, but yes, it's going up nicely.
Yeah, and it's a good company. I've been in and out of it, so it's been good.
It's wild. Like I picked it up at a fraction at 321 January. Yeah, last week. I didn't even know it was last.
Nice.
I thought it was like 2 months ago and it's 358. I don't know. Yeah, it's wild.
I ended up taking some profit from them because just don't know this day and time. They're still doing great.
Almost there, Anisha. Give me 2 more seconds. Caramba. Fine. Yeah, we'll try it. Let's try it. Why not? Work. Oh, there it is. Okay. Okay. Wait. Um. Y'all should have just seen that date pop up on y'all end. Y'all see it? See a little date just popped up? Almost there. 2 more seconds, guys. 2 more seconds. My God, I'm out. Here we go. All right, so if you were looking at the screen, you should see in a few seconds. It should change the display there. Bingo. Got him. Got him. Let's go. All right. I just need to get
Okay,
this.
so we're talking about the date and the.
Yeah, this thing here, the initial timing point, that thing right there.
Got it. Got it.
Yeah. So remember 144 was, the quote unquote end, right? So this would be the beginning. Okay. Let's take a look at sterling. And you'll notice when I change the ticker symbol, Alicia, you'll notice that does not change. That's what I meant when I said it has nothing to do with, has nothing to do with so when you guys get the new spreadsheet, you notice that won't be there. So it's good that I put it in code this time. Let's see here. Sterling. Let's take a gander. Let me refresh this page real quick. Hold on. What's going on here? Ah, crap. Hold on. 1 second.
RL instead of SRTL, sir.
Oh, that's what's happening. Okay. Or is it? Okay, that's what's happening. Okay. I was about to say, how did I put one little thing in here and it broke the whole sheet? You know what I mean?
Yeah, I was thinking the same thing. There's no way, you know.
Like it's never happened before. Of all, like I was about to say, of all days, the day after this, this is what you want to do to us?
You know, listen, I know. And I was like, there's
Thank you.
something technical.
Thank you, because I was about to go on the hunt. I don't know if you heard me just click. I already started typing on in.
I did. That's why I was like, wait a minute. It's got to be something simple.
Okay, I see that initial trimming point. I had stepped away.
I'm reading through it right now.
All right.
Yeah, see that? See this? This is what we're talking about. So when it says like structural confirmation, this is what I would wait for right here. Oh, you're talking about this initial timing point? This?
No, I said yeah, the initial timing point. But oh no, that's not. I said trimming. My thing is small. I thought it was.
Oh, you thinking about trimming your position, wasn't you?
Yeah.
Nah. So this is pretty interesting for Sterling, right? So you're getting a change of character to the upside with a bearish divergence. So I actually would call this a trimming point, Anisha. I actually would. Mm-hmm. 2.5 deviations, extreme statistical extension. So you're getting, look, that's crazy. Change the character to the upside, which means you're breaking structure to the upside. At the same time, hitting 2 standard deviations, 70 on an RSI. Yeah. Yeah. If you were thinking, I want to trim my position, today is your day.
I was early on that one.
Yeah. You know, just a trim though, just a trim. I wouldn't do too much because I mean, we know Sterling, it's strong. So, welcome back to the party, Sterling. Welcome back to the party. Okay. Okay. So this is pretty interesting, right? Here's what's interesting about what's happening right now. Right. So you see, you was looking at this initial timing point right here, Anisha, right? You see it actually happens to be just about the last day of January, close to the last day of January, right? So with this experiment here, that initial timing point would actually be calling for us to check the January barometer, pretty much, right? Do we see strength in the market or not? It's pretty dope. It is pretty dope. So 9 days from now, guys. Well, 8 days from now, we're gonna find out. Now Sterling is bouncing off of the 50% retracement and getting a change of character, Anisha. So that actually is some pretty, like, so you might trim the day and then just leave it, and then, I think just watch it run from here. It may have some ups and downs, some stalling out and whatnot. It's got to wait for the 20 MA to catch up with it. Pretty much, that's what's going to end up happening. 20 MA just needs to catch up. You know what's crazy about today? With everything that happened, right? And this should be a testament to like how you handle yourself in the market, right? We came into today with basically, we came into today with a losing position on Netflix and a wounded position on tech. The financial still holding up well, right? Either way, we came into today down. I'm actually still down on the day, right? But at the same time, right, you recognize the opportunities that exist in what's happening, right? You're able to decipher, decode what's happening. Like after making that move this morning with Netflix, I mean, nothing else really like mattered from there in that regard. You understand what I'm saying? I didn't even realize it was going on 11:30. That's how just, like it's just every day is just a normal day, guys. You know what I mean? Like no matter what's going on. Have you guys ever came into one of these sessions and we ever handled a day differently because of what's happening?
I would say no, even though, sometimes we may try to get you, to look at this or get on this conversation. But for the most part, I would say no, you bring us back. I'm not focused on that. I'm not moved by that,
Right.
That's what you said. We're,
Yeah, it's
and for me, I'll say that's good because it keeps me focused.
Yeah, definitely. It's really just a matter, Alicia, of like, look, nothing we do, right, should be altered because usually, and I just got another notification, Seagate is up another 5% again. Nothing we do should be altered because we've already done everything we need to do beforehand. All right. You can tell this wasn't a rush decision to do what I did with Netflix this morning. It was something I thought about. I gave it some thought this morning. I said, you know what? Yeah, okay, cool. Yeah, that's what we're gonna do here. All right. Notice I haven't pulled up Netflix yet.
I was going to ask you that question because you had already decided that even before the market opened. So, does that have a lot to do with us waiting on the tech sector earnings?
No. So remember, each position is its own body of work, so to speak. right? And they're meant to combine. They're meant to, work together. So what's happening in tech, I'm looking at that as different than what's happening in communications and what's happening with Netflix.
Okay.
Right.
Okay.
So remember we said we have the three things we're looking at. Right. The Netflix undervaluation, the tech mega cap undervaluation, right, and the recovery in financials. Right. Those are three separate things we're looking at. And so, so before the market even opened, I said, well, if this is how they're going to play it, I think in this particular case, they just made it, this gave us an opportunity to be even better off if and when Netflix approaches 100 again. Right now, can it do it by April? I don't know. Right? Are we still going to be in there by April? No, we're not even going to be there. Right? So, I mean, you get the point. Appreciate it, Prince. Appreciate it. So what are we gonna call this algorithm, y'all? What are we gonna call our little algorithm friend? Is this Jimmy? This Jimmy who never comes with the notes, Anisha. Oh, God. Nah, we need something though.
Date of the trade. You have it right there.
Well,
You want something short.
That's what this is, the notes down here, but that's not what the algorithm itself. He's a name, Gemini, you got Gemini, you got Copilot, you got Claude, you know what I'm saying? What do we call ours, He ain't all sophisticated yet, but oh listen, there will be a day where this thing will pull up the chart for you. I can see it. You say, hey, imagine one day it can work along with one of them other guys. Say, hey, pull up the chart for me, and drop some trends on Sterling infrastructure. Let me see what's going on that. Right, boom.
Love it.
It'll have all the same
time.
Right, all the same data in the background. Right, have all the same data in the background. Have everything working like it's working right now. Right, but then yeah, it's crazy. I'm yeah, it's pretty dope. Pretty dope. Mm-hmm. Okay.
Maybe at some point do like a poll and ask individuals to give some suggestions. And then we're gonna go from there. Because this is huge, dude. This is huge.
Yeah, that's pretty. I'm still soaking it in at this moment. Just the past week and a half, 2 weeks. I'm just soaking all that in right now.
And that says a lot because nothing impresses you to that degree. So that says a lot.
Yeah, this is like I've been just thinking to myself like this is like I've definitely been excited and like 'cause, like I usually don't get excited about anything, but this has been exciting. Just getting this done.
Now Google. Wait a minute. Was it above the microphone? Anisha, are you watching?
Hold on, no. You sound like something's happening. Let me check.
Well, it looks like.
Oh yeah, it's above it. There it is. And it's about to break the weekly pivot like we talked about. So then your breakout swing is coming.
All right.
There it is. So now you got your micro trend. So then now, and the craziest thing, guys, is how long did that analysis take? A few seconds.
Literally, I just pulled up Google and said, let me take a look at the indicator. I didn't even look at the chart. I'm looking at the PPI.
Mm-hmm. A few seconds, and we were able to really, and it's not going to be the same for every single, stock, obviously. We know that already, right? Everything can't be analyzed, but sometimes you can just see, I just kind of want to, 1 second here, guys.
Now, see, based on the chart, wait a minute, I'm on the wrong. I need to be on the 4 hour.
So just for the record, so the 4 hour chart, right? The 4 hour chart, what that does for us is it gives us the ability to, to see those, just that little, just tad bit. So if you look at this right now, right, see how this looks. So I go to the 4 hour chart. It doubles the amount of candles. Let's start with that. It just doubles the amount of candles you have in front of you. Right. So therefore, you can see a little bit more of what's happening. So watch this. Boom. Now all of a sudden you got that. Let's go back. Right. You have this. This right here. This right here. Right. Boom. All of a sudden you got that. So you can see a little bit more of what's happening there. Right. See that? Look at the low of the 24th. This right here. Look at this right here. Let's go back to the daily chart. All right. Loaded. All right. So you can see just a little more of what's happening in the market from that perspective. Right. And the 2 hour chart is another favorite of mine for obvious reasons. Look at that. Look at that. All right. So you get 3 candles, 3 to 4 candles, 3 candles a day. 3. You get 3 2-hour candles and then 1 half-hour candle, pretty much. All right. You have your hourly. This is another just beautiful chart. So really, I like to go, and I'll probably move this 2 hour actually out of the way for now. So I'm probably not going to be using it as much lately. So you kind of go from the monthly to the weekly, from the weekly to the daily, from the daily to the 4 hour, from the 4 hour to the 1 hour. Right now, you go from the 1 hour to the 15-minute. Right, that's how you really do that. You go from the 4 hour to the 30-minute. You go from the daily to either the 4 hour or the 1 hour. So this is how you kind of do it. So like if I'm watching from the hourly chart, then when it's time for me to take a trade, I go to the 15-minute chart. Everybody understand that? Does that make sense? If I'm watching from the 4 hour chart, then when it's time for me to take the trade, I go to the 30-minute chart. Or the 1 hour. I can go to the 1 hour as well if I wanted to. Right. But typically you're going to want to go to the 30-minute. Right. If I'm watching from the daily. Right. Then I can say, okay, cool. Let me go to the 1 hour chart. And if you notice, I've been watching on the daily pretty much all day. So we'll dial it down to the 1 hour just to see what's going on. So whatever chart you've been watching on, you let that determine, all right, when I wanna get a better view, right? I'm gonna choose something that kind of cuts that chart in four, or four or more. You were gonna say something there, Alicia?
No, I just noticed recently you've been on the 4 hour in the daily more than anything.
Yeah, I mean that's how it used to be a lot more. Back in the day, like back in the day, I never left the daily back in the day for the most part. But as you're teaching people, you gotta be able to adapt. Like you can't be a dictator and a teacher. That doesn't work, right? So you gotta kind of like lean into what your students are interested in. And I think now everybody's become more adapted to, okay, now they kind of understand why I'm always interested in that longer time frame. And so more and more people have said, yeah, screw that short term stuff, and now they want to do more of the long term stuff. So now I can get back to this. That's pretty much how it played out. you know yeah, like I would watch a full day of trading and never leave the daily chart, Alicia. That's how I used to do it. Imagine that, like the whole day. I'm talking like the whole day. And
But
just,
that makes sense because you're studying. I mean, that you're studying that particular stock. I mean, that's wisdom.
Mhm. Because I mean, and I would wait till the daily candle closes anyway, for the most part. And like I said, unless I wanted to make a decision intraday, in which case I come to like the hourly chart. And back then I used to use the 2 hour more. And actually, I probably will put the 2 hour there, instead of the 4 hour, Alicia. I probably will do that actually, since it actually adds up with the so basically you take the 2 hour to the 30 minute, or you take the 1 hour to the 15 minute. It adds up, right? So both of these are four times the other. So the 2 hour, four times the 30 minute, the 1 hour, four times the 15 minute. That's pretty much how you want to do it. All right. So let's put that there, so that way we can just use that from now on. And you can see how the 2 hour works really well. Works really well. So they trying to scare us with this pullback or what? Is it too early for butter cookies? Asking for a friend.
You eat whatever you want to eat. That's your problem.
Is it too early for butter cookies, y'all? Cast your vote.
Well, it's almost noon for you, so yeah, that's what you want to eat. But yeah, time is it really passes
Yeah,
in the mornings. Yeah.
tell me about it. But with everything that we had going on, that just played out really well. Played out really well. I think this is going to be options exploration this Friday as well. Pull up my calendar real quick. No, actually, options exploration was last Friday, and that's because we had 2 days, literally 2 days in the first week of January, which is why I don't do it. Pretty much, I always say, look, I'll count the week if we have, let's say we have at least one day, let's say, like off, like, so maybe it starts on Tuesday. Sure, I'll count that. I'll count it. But yeah, other than that, I'll just start counting from the other week there, or like how many days are left after you know, like, so if there's only one day in the last week, then I'll do whatever I have to do the week before the last. Like, let's say I need to rebalance my portfolio. All right, I'm not gonna wait for the first Friday of the next month. I'll just do it on the last Friday of this month. You know, whichever, however that works out. But I'm be honest with y'all. I'm in my breath of fresh air moment right now. That's why I'm kind of like not really rushing off, because I mean, like, literally, I got to get back to writing the book, of course. But I had that idea, and it seemed like if I let it, stew for too long, I'd end up in a bad position. So I wanted to make sure I did that, got that done. So I am going to get out of here. I'm going to do a little bit of writing, but so tomorrow things will get a little back. Things will be back more to normal. Since we got this out of the way now, and I'll probably have the last little bit of it done. I only have one more thing to do, like I said, which is to I have one more thing left to do, which is to just expand the phrasing, like just make it talk better, pretty much. And I guess from there to give it a name. State of the trade isn't going to work. I could go for something like state of the trade, though, Alicia. But the state of the trade was just, I had no idea. I had no idea what to put, so I just put that, and I didn't know what else to put.
Got it.
So.
And I understand now. I understand.
But anyways, I will catch up with you guys. For those that'll be there in the power hour, I'll catch up with you guys in the power hour. All right. Everybody be blessed. Stay well. We'll talk soon.
Later.
Later.